Let me simplify the AI boom for you. After ChatGPT came out, a handful of big tech companies decided to spend billions of dollars on Nvidia gear to catch up in generative AI. Notice I said a handful. This is just a few companies here, Microsoft, Meta, Google, Amazon, that are willing to spend to get this type of equipment. The problem with that is that it's concentrated. And if any of those customers decided to pull back on spending, it would have a huge effect on Nvidia, its larger ecosystem, and the entire stock market. So how big a risk is this? Well, let's look at the numbers and you can decide. First, let's look at the company that has become synonymous with AI, Nvidia. Before 2023, Nvidia had never reported that one customer accounted for more than 10% of its revenue. But in 2023, one customer accounted for 13% of Nvidia's revenue, according to its annual filing. Now, we believe this company is Super Micro, which is a company that puts together servers and buys gear from Nvidia to sell servers to end customers. And beyond that, Nvidia lists another customer that accounted for 19% of revenue last year, and some analysts believe that that is Microsoft, who is buying gear straight from Nvidia as well as servers from Super Micro. And if we look at Nvidia's most recent quarter, we can see that that customer base is becoming even more concentrated. In its latest quarterly filing, Nvidia disclosed that it now has 4 customers, each making up more than 10% of its revenue, which means that just those 4 customers, which we can assume to be big tech, quote-unquote hyperscalers, those building huge cloud systems, combined, they are making up nearly half of Nvidia's quarterly revenue. And this concentration problem isn't just on the Nvidia side. Super Micro disclosed that between 60 and 70% of its business is reliant on supply from Nvidia. And this concentration problem could be even bigger outside the Nvidia ecosystem. Nvidia rival Cerebras, which is looking to go public, recently filed IPO paperwork that showed of its revenue, 87% comes from a single customer outside the United States. So the future of all of these businesses are heavily reliant on just a handful of companies spending massive amounts of money. And you can see that in this chart, which tracks capital expenditures for big tech, also called hyperscalers. These are companies that are buying these massive amounts of very expensive AI hardware to build up their data centers, offer cloud computing options, or other things they're trying to do. Now, while some of these costs from companies like Microsoft and Tesla and Meta are also for land procurement and buildings and utility bills and all of this kind of stuff, David Kahn from Sequoia Capital estimated that roughly half the costs are associated with GPUs and Nvidia hardware. And all that spending is why Nvidia is now worth $3 trillion. The company doubled its revenue last year and multiplied its profit by 7 from the year before, and is looking to double its sales and profit again this year because of all this spending. But now investors are expecting to see that type of growth continue. Can it continue with just a handful of companies spending all this money? And what happens if just one or two of these executives decides, you know what, I think we bought enough. I think it's time to cut this off and use what we've got before we start buying anymore. What if all of them do? Well, then this whole thing falls apart. And this is why, if you're investing in AI, you really need to be paying attention to what these big tech hyperscalers are doing and saying. Every time a new earnings comes around, are they committed to continue spending on this Nvidia gear? Because if not, we could see a big turnaround in some of these stocks.